You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
All right, we brought him back. Welcome to Quasar Markets Live. The man, the myth, and definitely the legend, Jim Iuorio, the managing director of TJM. Jim, what the hell is going on these last 2 days, man?
So yesterday was amazing to me. So Donald Trump comes out and says, a 90-day stay of execution or whatever the hell he called it. And everyone thinks that means everything's over. Well, no, everything's not over. The entirety of this whole exercise was 70% China related. I've been describing it as an old Western movie, and there's the big gunfight, and there's 70 dead bodies laying in the dust, but now the bad guy and the good guy, and you can decide whoever you want who the bad guy and the good guy is. I personally still think the good guy is the United States, but it's only by a narrow margin. They are now faced off. So that was 70% of the entire thing was China. We're realizing that today. Yesterday didn't really solve much of anything. That being said, even within that realm, probably 40 to 50% is just about semiconductors and chips. So it's very, very Taiwan related.
Yep.
So nothing is really settled. Plus, we still have an administration that tends to cause volatility, which, by the way, and I don't know if I said this last time, but I'll say it this time, is that I don't love volatile tweets and headlines coming on an every other day basis from the administration. That being said, it's not all bad. People who participate in these markets should be reminded on occasion that there is risk involved, meaning volatility. I think maybe the same thing with 0 days to expiration options, the big proliferation in those. I'm starting to think that they might be good for market structure because on a daily basis with gamma squeezes, they can cause massive intraday volatility, which might then reveal some of the lazy built up long positions and remind people that there's risk. Does that sound crazy?
No, you're absolutely right. I mean, I've actually been hard on them calling death contracts, 0 DTE death contracts, because that's what they are.
Yeah, for the people using them, right.
But right now, I think it's changed a little bit. I think it might actually, I might be changing my tune a little bit on the 0 DTEs, a little bit. All right, let's get right to it. It seems like the world's dividing in half, China and Russia versus the United States and the rest of the world. Am I right or wrong?
No, I think that's definitely the way to say it too. And this could be interesting, particularly the China part. But the Russia's been on that side and we've been against them, which I don't understand. Like when we embargo and put sanctions on them and Russian oil, it hits the market. It just hits it through different channels. So it's kind of a hollow and silly thing to do because all it does is hurt us in the oil market when it first happened. And now, of course, Russian oil gets to the market whatever way it can. So now it's just pretty much China. So then the question becomes, is this going to be something that when we had Vivek Ramaswamy on our show about a year ago, and he's very much of a straight shooter. I like the man a lot. And he was talking about how we need as a country to reroute supply chains outside of China. We can't have China having this much power. I think the Trump administration truly believes that. So there's one of two things that can happen. Either they play complete ball with us, which that doesn't seem 100% likely, or Trump just says, the hell with you. We're willing to take a few years of pain and reroute our supply chains through Vietnam, India, Mexico. There's a caveat, though. Donald Trump's got to show some positive results in 2 years' time. That's the way our system's set up. That's when midterm elections happen. You and I both know that this is a process that should probably take 5, 6, 7, 8 years, and he's trying to shove it into 2 years. Good luck. I don't have high hopes for it going without a hitch. And in 2025, we're seeing some of those hitches.
Yeah, I mean, our previous guy we had on here, Michael Litt, said a lot of this reminds him of the McKinley era, where 2 years later it was the biggest House loss in history, right? So politically, I think that's why he's crushing it. All right, but Trump has on several occasions called, we got to take our medicine. We got to rip the Band-Aid off. I've heard every adage in the world. What does that pain mean? He said, we got to feel some pain. What does that pain mean? Does it just mean stock market, or does it mean pain and everything else too as well?
So I think it means pain in the stock market for sure. I think when he thinks about the implications of the tariffs themselves and whether or not it's inflationary, one-time inflationary, that's part of it too. Now the stock market pain is evident. We're realizing that right now. Now the inflationary effects of tariffs have been studied since trade was invented, and it is not as clear-cut as saying the consumer pays the tariff, because the exporting nation often subsidizes the tariffs. China does that. The exporting company reduces their margins to remain competitive. The importing company reduces their margins, and consumers have choices. And currency pairs oftentimes fluctuate to represent the tariff. So it's not as easy as saying the consumer pays it. Plus, it's usually a one-time shot with tariffs. So it's not this persistent inflation expectations becoming embedded, and therefore they build on themselves. So I don't think from an inflationary standpoint they're that big a deal. But I do think not having China, it could be a rocky road in 2025.
Yeah, I said on my own show, look, the goalposts, as I've been saying, over at the Fed continually get moved. The ball gets kicked down the road. Powell keeps saying, well, I need more data. What does he need to see? Is he going to cut rates? Trump wants him to cut rates. What's going to happen here?
Well, let's talk about the CPI today. CPI came in at 2.4, much better than expected. So I think it clears the road for him to ease a little bit. I think he understands something that I don't. It seems like I'm the only one who's talking about it. I'm not trying to pat myself on the back. I'm just wanting you to ask you, am I crazy or not? So we zap $10 trillion out of market cap with the stock market. This inflation, we know that this inflation was driven by the top 10%, the asset holders in this country. As a matter of fact, the 10% were accounted for 50% of the consumer spending over the last 2 years. That's an inordinately high amount. I think it's usually about 35%. So all of a sudden we take all the money out of those people's pocket. You don't think that's going to have a deleterious economic effect? I'm not crazy, am I?
No, it's interesting. And I also mentioned the same thing myself, that not only in the United States, but I think it's going to hurt China too. I mean, a lot of the products that we were making were in the Shenzhen province. All those people start losing jobs. China's not going to be a happy camper. They've got these new buildings and roads, and they got to fill up with new people. They're going to hurt too, right?
Well, yes, but the problem is they don't have to answer for it at the ballot box like we do here. And in countries like that are, are Democrat socialist utopia, communist socialist utopias, whatever, they stay in power until the point where they piss people off so much that there's beheadings in the square. Now, I do think that they're worried about that, but that's a far, far distance away, whereas we have to worry about the ballot box in 2 years. So that gives them a decisive advantage in this negotiation. But they're coming from a weaker spot economically, too. So this is, guys like you and I love puzzles like this because there's so many moving parts to it. And each day you're trying to snap them together to figure out what's going on. And by the way, from an investment thesis and from the beginning of this week, me and my team at the Finance Unfiltered newsletter, we're talking about gold being our highest conviction buy, particularly when we saw bonds go absolutely lower the last couple of days. Because what they're saying, what the bond market is saying is what the gold market is saying is that if bonds continue cascading lower, and maybe China's selling them, maybe Japan's selling them, that doesn't matter to me who's selling them. But if that gets away from us, the next step would be then the Federal Reserve to come in and support the bond market with QE. They've done it before. And if that case, the dollar goes down, you might not be able to see it against the euro and the yen because they do the same sort of nonsense, but you're going to see it against gold. And then boom, gold up $100 off the low in one day.
Yeah, you see gold now, the highs, pretty much an all-time high, 31.74 right now.
Pretty damn close. A little bit higher, I think like 32.10, but that's about it.
Yeah, we're close. Yeah, 131.74.58 now in spot. So look, I've said it all along, we need to have adults in the room. Scott Bessent seems to be the adult in the room, right?
Mm-hmm. Yes, he does seem to be the adult in the room, but I know this from, it's probably not hard for people to figure out who my insider is on the Trump team, considering he and I have been friends and doing shows together for 25 years. Yeah. But he told me one thing that just always amazed me. He told to me a couple of years ago and said, Donald Trump is a great guy. Donald Trump's got a good head on his shoulders. Donald Trump is kind to all his friends. There is one thing, though. When it comes to negotiation, he doesn't take advice from a lot of people. He goes it alone. He fully believes that he's the world's greatest negotiator. When that was said to me, like the person saying it didn't necessarily believe it. He was just saying that Trump believes it. So I don't know if having adults in the room on this sort of negotiation is going to help, except for the fact that I do think that yesterday him granting clemency or whatever, I know I used a different metaphor before, stay of execution for the 70 countries was part of the bond route.
I was getting ready. For him to say he's not looking at the markets, I think it's kind of a little nutty there. Because, when the bond route happened, the next day he comes right out. So I think
next day he comes right out. So and by the way, he's always said he's not really looking at equity markets. He is definitely looking at bond markets. When you have $9 trillion to roll over in debt, just in the 2025 calendar year, you
right.
sure as hell better be concerned if it's going to be at 5% or 3.75%. There's a big difference there. So for him to be concerned about the 10-year market, bond market is excellent. If yeah.
Before I let you go, man, I got to ask you one more question. Is the Fed going to cut rates or not?
They are going to cut rates. I think they're going to cut rates. If there's a June meeting, right? That's what I was looking at today. I think they're going to cut 25% at the June meeting.
And no intermeeting cuts, no intermeetings questions.
I think Jerome Powell wants to portray himself as the steady hand, and to have an intermeeting cut is almost an admission that things are getting out of hand, even though you and I know it's not, because the situation can change rapidly. Right. But it could appear like that. So that's why I don't think an intermeeting cut is in the cards.
And our steady hand right here, Jim Iuorio, TJM. Listen, man, thanks, and I'll see you in a couple weeks, man.
Thank you. Good to see you, Skinny.